Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hello, everyone, and welcome back to the IRS Debt and Audit Podcast with Brian Loughrin. Brian's a seasoned tax attorney based in Tampa and the founder of TampaTaxRelief. For more than 25 years, he's helped individuals and business owners across the country resolve serious IRS problems, from audits to tax debt to cases in the U.S. tax court. I'm SeanOConnor, and today Brian and I are talking about what's known as currently not collectible status and how the IRS sometimes pauses collection efforts when someone simply doesn't have the ability to pay. Brian, good to see you.
Good to see you, Sean.
I can relate to this, not having the ability to pay. A lot of people assume the IRS will just keep collecting no matter what. Are there situations where, that's just not the case?
Yeah, there are, and it really depends upon, obviously, not just the particulars of a person's situation, their own subjective viewpoint, but just an objective viewpoint. And there's times where people are in economic straits. Maybe somebody's on a disability. They're not working and they're living off $30,000 or $36,000 a year in disability payments, or somebody has lost a job and they have had an inability to gain employment. Or there's a very serious medical condition. Maybe somebody's unable to work or hospitalized or something for an extended period of time. So it really does depend upon the particulars. But yeah, absolutely.
Got it. Yeah, and then they'll just say, okay, well, this is not worth our time and effort. So,
Well, that's the bottom line if you get there, but it's getting there. That's the heavy lifting.
Well, what has to happen? What usually has to be going on financially? I mean, you mentioned a few things, but like, for the IRS to step back from active collection, are there certain oh yeah, check, we're not collecting this?
Yeah, I mean, let's put it to a situation where somebody's not working at all. Let's just say, somebody doesn't have a job, they have no income. Of course, people say, well, if you have no income, no job, how do you live? Well, they could be living with a relative, a parent, or a significant other or adult child. They could be living there. And they have no income. Somebody who's 40 years old, they're not eligible for Social Security retirement. They're maybe not meet the parameters for Social Security disability. And for whatever reason, maybe they don't meet the parameters for unemployment, and they literally have no income. And it happens. But people will say, well, how could they have tax debt? Well, maybe not long before that, they were doing very well in their chosen profession or business or what have you. But yeah, absolutely. There are times that's kind of the bottom line. It's the sliding scale side of it that you look at for currently not collectible. And that is somebody, maybe they are still working. They maybe have a reduced income, but you have to look at certain expenses that are deemed allowable or legitimate expenses with the IRS, such as, basic housing, utilities, food, transportation, and they somehow will meet that threshold even with an income.
So when a case is placed into that, currently not collectible status, what does that look like from the taxpayer side? Do they get a letter, a notice?
Yeah, they'll send a letter, and it'll say right there, the second paragraph in is a separate statement, case closed, currently not collectible. And it's the thing I say, hold that letter. It's very important because that is something that you can rely upon. Obviously, the IRS should have a copy or a notification, but somehow, some way, if they don't, just hold that letter. It's treated as a very valuable letter. And of course, we get a copy of the same thing, and we get a copy of all the notices and communications our clients receive. And we save that in our file electronically, and we have that, and it shows up the tax periods involved, and it is an indefinite situation, which means there's no sunset on it, other than if, say, for instance, the balances were to run the time clock, and they get extinguished due to the statute of limitations. But short of that, it's not an automatic 12 months or 18 months where it comes back into play. It's indefinite, but there's obviously things can change that.
Got it. So I get this letter, case closed, hold that letter, but it's not as if they're going to unpause and come after that money necessarily.
Well, what I say is this: I use a simple analogy. You've got like a shirt tail relative, a cousin or something, that comes to you and borrows money. They borrow $5,000 or $1,000.
Yeah.
And I'm gonna pay you back. I'm gonna pay you back here and this and that. Well, time goes on, and 6 months to pay you back, and a year goes by, and they don't pay you, and all of a sudden, another year, and finally you realize you're going to run into this relative at a family get together, some holiday dinner, and you tell everybody, well, I see him, I'm gonna let him have it. I want my money. And they say, oh, you hear, his house burned down, his wife left him, he lost his job, his
Yeah.
car got stolen, and he just got out of jail. Well, are you really gonna go hit the guy up for the money at that point? Or are you gonna say to yourself, I'm not gonna say anything, but the guy still owes me the money.
Yeah.
Okay. Doesn't mean the debt's forgiven. And that's the same thing here. The debt's not forgiven. It doesn't just go away.
Yeah.
But if they're not actively pursuing collection, then to that extent, it is as if it went away, at least from a practical standpoint.
hmm How does the IRS actually keep track of someone's situation once they've put them in that non-collectible category?
Well, I think it's kind of top secret, really. They don't really tip their hand too much. But what I tell people is this, and I've had a lot of clients that are really high earners, and then they bottom out. They're kind of an up and down business. And then they go from making, $1 million 1 year to, the next year making 10,000 or something like that. And they've spent all the money they made before in it. I would say if you submit another tax return, because you still have a filing obligation going forward, and that's a mistake a lot of people make when they get into non-collectible status, is maybe they don't file. And I say, look, you're always better off filing. If they have a little bit of income, I even tell people, even if you have no income, I would still file. Still go online and file, because that way it shows the IRS you're in filing compliance, even if you don't have to file.
Right.
But what happens if somebody all of a sudden starts hitting big again, and they go out and they start making a lot of money, and people say, well, how much is it? What's the threshold? I said, well, there's no, yeah, first of all, the IRS would never tell us that. Okay. And I wouldn't expect them to. But just use some common sense. Okay. If you go start making 35,000 a year, I doubt that's going to do anything. You make 350 grand, it's very possible that when you submit that return, there's some type of trigger within the system that says, hey, we need to review this. We need to look at this again. And there's even times where people aren't making a whole lot more money, or even really any money, and they get a letter saying, hey, we want to review your currently not collectible status.
Okay.
And so they'll send a letter. And of course, people get a letter like that, whether they're our client or not. And they say, well, what do I do? What do I do? I said, well, that letter says that you need to respond by providing updated financial information. And people say, well, my situation hasn't changed. I'm still living with my adult children, or what, or boyfriend, girlfriend, whatever. I'm still not working. I say, well, then just let them know that. But you don't want to ignore that letter that says, hey, provide us an update on what your situation is. Because if you ignore it, it'll automatically take you out of non-collectible.
What would you say surprises people the most once they're in this status? Is it the, hey, they're asking to review my situation, or there's some other issues that come up that people are surprised by?
I think a lot of times people, and we tell our clients, but I think people forget because we cover a lot of information. But I'll say you're going to get a letter at least once a year from the IRS, and it's going to detail the years and balances that you still owe. And people, oh, okay. And then, of course,
6 months
9
later, it
months,
comes.
10 months, a year later, whatever, I get a call from a client, say, oh my gosh, I got this letter. And I said, well, no, the letter says that this is just what you own. It says right there at the top. If you are in a formal resolution, or if you're in a non-collectible status, you can, ignore this letter. This is just to provide you an update of where you stand. And I think that's something that's gone on practically forever with the IRS. But now that people can more readily access their own transcripts at the IRS website, more and more people kind of monitor things that way. But I just tell people, look, you're going to get a letter and it's going to detail the balance. That doesn't necessarily mean that you're not non-collectible.
Yeah, just they get a letter from the IRS and suddenly they can't read.
Well, a lot of times people call up and they say, I just came in from work and I have 5 letters from the IRS. And I go, well, okay, what do they say? And they said, well, I haven't opened them yet. And I said, well, I can tell you they stopped putting rattlesnakes in those letters about a year ago. So I think you'll be safe. So go ahead and grab a butter knife, tear those things open. Or if it's if it's a client that we've either obviously representing, or maybe we've recently represented them, oftentimes we're still getting a copy of those letters or notices. And I tell my clients always, our copies as the power of attorney are always, for some reason, seem to run at least a couple of days behind whatever the taxpayer gets. So either give it a couple of days or just open it up and see it, but just take a look at it, even if it comes certified. That's the other thing people oftentimes get very panicked about. It's certified.
Yeah.
It's a certified letter. Okay, well, go ahead. And do I sign for it? Yeah, go ahead. I mean, I get some certified on behalf of clients, and sometimes I get letters that are certified to the taxpayer, but not to me as our copies of power of attorney. But you're always better to open up the letter. course, I get people coming in and they bring in a paper sack full of letters that have never been opened, and I get it. Look, it's a scary thing, but I always tell people jokingly, I said, I'm probably one of the only guys in America that loves getting letters from the IRS. I love it because it's what I do.
Well, I mean, it is. I mean, my own personal experience, I tend to get uh, letters from the IRS that are verifying. It's like they've updated my mailing address.
Yeah.
Like something in the system when I submit something, like it's an apostrophe or a formal USPS zip code or whatever, I'll get a obviously an automatically generated, hey, we've updated your LLC business address. But even the heart skips a beat, even though I'm like, oh, this is just be a man, open the letter, you know?
Well, if you put a smiley face on the front of it, if it's not a collection letter,
Yeah.
and then the skull and crossbones if it is, and then that way people would know to open it. But it's interesting you say that because for my business, I kept getting a letter every 3 months saying they were updating my business address, and it was identical to the address that they already had.
Yeah. Yeah.
So it happens sometimes at the identical address, and I'm like, "What are you updating? It's the
Yeah.
same address."
I think it's
I
the same.
saved them,
I don't even
but
know.
just and that does bring on a point though. It is important that people understand, and we've talked about this before. If you change your address, you need to notify the IRS.
Yeah.
And again, they work off the address on your last filed return or their own separate change of address form. You cannot rely upon the post office to provide that updated information to the IRS. It's very important.
Got it. So let's wrap up with we're talking about this non-collectible status. When someone is in that position, right? How does the case usually evolve over time? Is it something that's kind of pretty quick and like, all right, that's happening, or uh, is there a series of uh, steps that take place?
Well, a lot of it depends. I mean, if the standard rule is a lot of people know is that the IRS essentially has 10 years to collect on a tax debt from the time the debt actually processes through or becomes assessed. It starts a 10-year clock, and this 10 years isn't carved in stone. There's things that can stretch it out, but by and large, so I've had many people over the years come in, they get their first tax bill for the previous year. It's a large bill, and they say things have changed. Oftentimes, again, health issues,
Yeah.
maybe something that they're just not working, what have you. And I get them in non-collectible status, and they say, well, how long is this going to last? And I say, well, a lot of it depends on income and so forth, but in some cases, it lasts the whole time that the IRS has. In other cases, if it's a debt that the IRS maybe only has a short period of time to collect on, well, the system's probably going to generate a letter maybe a year and a half before that debt were to drop off saying, hey, we want to get an update. And people say, well, we just started this non-collectible status in the last year. I said, again, a lot of it's set up in the computers and the software and algorithms and all that.
Oh,
They're just monitoring. So there's not a quick, hard and fast rule other than if you don't file. And again, I tell my clients, even if you don't have a filing requirement, because I didn't earn enough to have to file, okay, I'd still file, okay, because the system looks at whether or not you filed. And they're not always going to do a deep dive and say, oh, this person didn't have enough income. They didn't need to file.
yeah.
Sometimes I think the system sees unfiled, and it triggers a letter saying, we want to review your status. And in some cases, and people aren't necessarily obligated to notify the IRS when their status changes. They don't call the IRS and go, hey, I just got a new job. I'm starting next week and I'm really loving it. And I think I'm going to make a lot of money. I mean, you don't have to do that. You do have to file. Okay. So it might take till a whole nother year of filing for the IRS to realize that. But it's just important that you monitor your own mail, and just depends on your situation. And
Yeah.
so many factors can go into it, but it's an excellent resolution for a lot of people. And I will say this, a lot of people just contact us, say, I want to do an offer in compromise. I want to get that shaved down and so forth. And we do offers in compromise. But a lot of times for their situation, currently not collectible is really a better resolution in that we can tell in so many cases up front, the person's not going to qualify for an offer in compromise. They're not going to qualify, but they may very well qualify for currently not collectible because that's what it says currently. Yep.
Got it. Got it. Uh, well, Brian, thanks again for the time and sharing your expertise on this. Really enjoyed talking to you as always. And we're up against time, but we'll talk again in the future.
Thank you, Sean.
You bet. That's it for today's episode of the IRS Debt and Audit Podcast. If you want to learn more about Brian Loughrin and his work helping individuals and business owners resolve serious IRS problems, visit his website, TampaTaxRelief.com. Thanks for listening. Maybe leave us a thumbs up or maybe an actual review. You can also subscribe to the show so you don't miss any future episodes. I'm SeanOConnor. Have a great day.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.